So I thought I'd just start by sharing with you where Vitality was born. It was born here in South Africa by an insurance company called Discovery. Now, Discovery started in 1994 and it started out as a medical insurer. And what Discovery realized after a period of time is that if they were going to compete from a cost perspective, one critical element was to try and make clients healthier, because healthier clients are claiming less, which meant we could price more competitively and our business model will be more robust. And they came up with this concept of let's make people healthier. But now it's one thing to say, let's make people healthier, but it's another thing to actually get it right. And that's where the Vitality program was built, with a focus on trying to make people healthier. And the foundation for the Vitality program was actually a study done in Oxford University called the 3-4-50 Alliance. And what this alliance recognized is that there are three human behaviors: smoking, diet, and physical activity that influence four major diseases: heart disease, lung disease, cancer, and diabetes. And these four diseases are responsible for 50% of deaths. So three behaviors, four diseases, responsible for 50% of deaths. So what we as Discovery realized with the Vitality program was, if we can manage these three behaviors, ultimately we improve risk and we improve the experience of our clients. Now, what's interesting with what the Oxford University identified, it's stuff we all know. We all know that if we don't smoke, we're going to be healthier. We all know that if we exercise, we're going to be healthier. We all know that if we eat healthy, we're going to be healthier. But the reality is, as people, we always put these things off. I'll get to it when I need to get to it. While I'm feeling good and while I'm feeling healthy, it doesn't seem that important. But unfortunately, when it gets too late and your health is gone, it's too late to do anything about it. So what does the Vitality program do? Not only does it identify that these are the behaviors, but it realizes from a behavioral science perspective that you need to incentivize people to change behaviors. And only if you incentivize them will you get that change, that ultimate change, and that improved risk pool at the end of the day. So the Vitality program drives this behavior change through reward and incentive. It's amazing what someone will do for a cup of coffee. I'm a prime example. I never used to run, but now I never miss my cup of coffee every week, and that requires me to run 3 or 4 times a week. But I do it because I want my free cup of coffee. But not only that, by having started the program, I'm actually enjoying the running. And that's the wonderful thing about the Vitality program. Number one, it incentivizes people to change behavior. But what it also gets them to realize is that once they've changed behavior, it's actually quite enjoyable. So Vitality itself was launched in 1997 here in South Africa. We as Discovery have integrated it across all our business models. So we have a health insurance company, we have a life insurance company, we have a short-term insurance company, and we have an investment company. And our Vitality program links the products from all four of those businesses, and it's what we call a composite model. What we then did is we expanded in 2008 to the UK, and we've built a similar business model there called Vitality UK. We've used the Vitality brand itself there, and again, we've got a composite model there where we've got a whole different range of insurance offerings. But I think the step change for us as Discovery and for the Vitality program was when our reinsurers approached us in about 2010. Now, most of you would know a reinsurer is an insurance company that carries the additional risk that you as an insurance company don't want to carry on an individual life. So an individual life might want $100 million worth of cover. You as an insurer are comfortable to carry $30 million. The reinsurer will take the other $70 million at a fee. So our reinsurers approached us in about 2010 and said, we've been looking at this Vitality program, we've been analyzing it, and we agree that it changes behavior and that it reduces risk. So much so that we are going to start pricing risk based on the client's Vitality status. We will charge you a risk premium based on their status. The higher their Vitality status, the lower the reinsurance premium we will charge. And that really validated the program for us. And not only did it validate the program, but we had this reinsurance company start telling all these insurers around the world how the small little business in South Africa had revolutionized the concept of risk management. And we started getting approached by insurers to say, tell us more about what you've done. Can you help us in implementing something similar into our markets? And where has that led us over the last 10 to 12 years? We have created an international business where we partner with insurers around the world and we position Vitality or link Vitality to their offering. One of our partners being John Hancock in the USA. But as of today, I'm speaking today in South Africa terms, we have just launched in our 40th market around the world. So what does that mean? Vitality is linked to insurance offerings today in 40 markets around the world. So it's been an incredible success story. All right, so that just gives you a sense of the origins of the Vitality program. Now, what we've built this program around is what we call the shared value model. And when we engage with insurers and we engage with different markets, we position this concept of shared value. And what does shared value mean? We say that if you are prepared to embrace improving the health of your client base, at the end of the day, there's value for all role players. There's value for the insurer, there's value for the client, you as client, and there's value for the intermediary. So what is the value for the insurer? If you've got a healthier base of clients, number one, your risk pool comes down, your claims come down, which ultimately means you become more profitable, which ultimately puts you in a position where you can price more competitively, which ultimately gives you the opportunity to grow your market share. So from an insurer perspective, healthier clients make absolute sense. And also it attracts healthier clients, which ultimately further improves the wellness of your lives, your pool of lives that are covered. From a client perspective, the wonderful thing is that traditional insurance changes. There's a change from traditional insurance. No longer are you just getting cover that one day pays out when you're not around. You actually got cover with tangible benefits that give you rewards and incentives while you're alive and healthy, number one. And number two, it makes you healthier. And number three, ultimately, it makes your cover more affordable. But I think what's even more dynamic from a client perspective is you get taken out of a pool of lives who maybe are not managing their health as well as you are. So how does traditional insurance work? If I apply for additional traditional insurance life cover, what does the insurer do? They underwrite me up front. They say, let's have a look at what your health looks like today. And based on what your health looks like today, they offer you a certain premium for cover. But what they have to assume, because they don't know how your health is going to be managed in the future, they have to assume that you're not going to manage it that well, because otherwise they are obviously not going to price as accurately or as conservatively as they can. So insurers have to assume that on average, people's behaviors with regard to health change negatively, and people are going to become more and more unhealthy as life goes on. So they price you in a pool of lives where the behavior is anticipated. The wonderful thing with Vitality-linked insurance is, yes, you get underwritten up front just as you would with traditional cover, but then your behaviors going forward determine what you pay for cover. So if you look after your health, you're not getting pooled with those lives who aren't looking after your health. And that, I think, is very much an appealing benefit for consumers, because at the end of the day, you want to pay for the risk that exists, not for the risk of others that have negatively influenced that pool. So that's the benefit for the consumer. At the end of the day, you're individually priced, you get tangible rewards, you have a healthier lifestyle, and ultimately, as I said, cost of cover comes down. Then importantly, for you guys as intermediaries, what's the benefit for you guys? Now, as intermediaries, your sole source of income is insurance, is commission. So if you can increase sales, that works. And the wonderful thing with Vitality is it gives you a greater pool of clients to sell to, because the young and healthy who traditionally are not interested in insurance, all of a sudden it's appealing because they're getting these benefits and the rewards that resonate with them. Whereas normally the healthy lives, the young healthy lives would say, you know what, because I'm healthy now, I'll only worry about insurance in 10 years' time. Now they're ready to buy it now. They're more receptive. So that's the one benefit. The other is if you can show them the value of the rewards that they would get by managing their health. Most people are underinsured, and they will now be prepared to spend the savings that they get on rewards in buying up their cover, which means they have the opportunity to buy more cover, which means we've seen with Vitality-linked insurance policies, on average, premiums are about 50% higher than non-linked policies. There's great cross-sell opportunities. And what do I mean by that? You've got wonderfully positive touch points with clients who are engaged in the Vitality program. Well done on getting your first weekly reward. Well done on going up a Vitality status. There are a whole lot of positive events that happen in the program that give you opportunity to contact your client. And the more you're speaking to your client, the more opportunity you have to look at what other needs might exist for your client. And then the lifeblood of any intermediary advisor is referrals. People hate traditional insurance, but people love Vitality-linked insurance. And your happy clients who are engaged in the program and enjoying it are going to want their friends and family to experience insurance in the same light that they are experiencing it. So that's the foundation, as I said, of the Vitality program is this concept of shared value. And it's important that you understand the value for yourselves as advisors and you understand the value for your clients. The value for the insurer is obviously there as well, which are positioned. And then the last point that I'd like to just talk about is FinFit Life itself. I just think the business that Howard and John and Bill have built here is exceptional. But the concept of linking financial and health wellness together is exceptional. The fact that this business of FinFit Life has brought into the concept that when it comes to insuring lives, it's not just about making sure the risk is protected, but it's about helping people. It's about making people healthier. It's not only about financial wellness, but it's about physical wellness as well. And I mean, one of my colleagues in the UK was saying to me the other day, a lot of the times when they engage with advisors and they engage with clients, the one message that or the one question they always ask clients, they say, think of, or in particular, unhealthy clients. When you go to somebody who is not well and you say to them, if you had one wish today, what would you ask for? And people will say, for my health. But it's amazing how we wait until things have gone wrong before we start looking after health. And the wonderful thing with Vitality is it drives people to start thinking about their health now. Now, from a client perspective, what I just want to sum up, I think FinFit Life is doing exactly the right thing, and you guys are a beacon for this Vitality program. You're great ambassadors for it. And I think what it's doing for clients is it's giving them a different perception of the role of insurance and the role that an insurer plays. And it's giving them a different perception of how important the role of a financial advisor is, which is what you do. It's not only about protecting risk, but it's about helping them live their best physical and financial lives as possible.